Hello everyone, welcome to my channel, and today I am going to talk about a company called as Thyrocare Limited. Okay, so before we begin the video, the general disclaimer: this video is not an investment advice. Please do your due diligence before making any investment decisions. Okay, so a little bit about the company. The IPO of Thyrocare came in the year 2017. The issue price was 446 rupees, okay, and the listing price was 662 rupees, right? So the listing gains were a good 38%. Although 38% was not a very high listing gain in the year 2017, because there were much more successful IPOs than what we have seen in Thyrocare, right? Now, business for Thyrocare was excellent during COVID. Okay, I'm sure you remember the cases where many governments had made it mandatory for people to have RT-PCR tests. Okay, and especially before traveling. Okay, but what happened? That particular mandate it became non-existent. Okay, as time passed. Okay, and as soon as that happened, the business for companies like Thyrocare and SRL and Lalpath Lab, it started declining. Okay, that is point number one. They did fantastic business during COVID, but that was not a sustainable level of business. Okay, so eventually the market has realized that. Okay, so if you see the chart price, if you see the chart for Thyrocare, okay, you would see that the stock is down a good 40-50% in the year 2022 itself. Okay, now declining business due to fall in COVID cases is the number one reason. Okay, however, there is a more prominent reason according to me. Okay, so what happened in the year 2021 is that Thyrocare promoters, they sold 66% of the company to a company known as Pharmeasy, right? I'm sure you must have heard about the name Pharmeasy, right? And the valuation at which they sold is very attractive. Okay, the promoters exited their stake at 1300 rupees per share. Okay, and if I'm not wrong, the all-time high made by Thyrocare must have been around 1500 rupees. I'm not exactly sure, but it must have been around 1500 rupees, right? So you see, the promoters exited their stake at almost the top. Okay, maybe 10-15% below the top made by the stock. And what has happened after that? The stock has corrected significantly and currently trades around 600 or 700 rupees, somewhere in that range. Okay, so what exactly went through after the Pharmeasy acquisition? Okay, see, the way this industry has evolved, it is very important to understand this. Okay, number one, it is an extremely competitive industry. Okay, so there are many players in it, both at the national level and at the regional level. Okay, so Lalpath Lab, SRL are the market leaders. Then there are companies like Thyrocare. Then there are companies like Metropolis, and then there are many small local diagnostic setups which you can see. Okay, so this is an extremely competitive and a fragmented market. Okay, so what is happening now? Okay, so companies like Pharmeasy, they are trying to act like a customer acquisition machine or a customer acquisition business. Okay, see, Pharmeasy is into the online business, right? They sell medicines online. Okay, so it is very easy for them to acquire a customer. Okay, give it to a laboratory, get their request serviced. Okay, and then make some payment to the laboratory, right? So it is, this industry structure is now getting evolved into that of a front end players and back end players. Okay, and who all are the front end players? Pharmeasy, 1mg, and a couple of other portals like NetMeds, and many other portals are there, right? And then what they do is they pass on the business to laboratories who act on the back end. Okay, and what was very shocking for me is as soon as Pharmeasy acquired Thyrocare, the management of Thyrocare started saying that we no more want to be focused as a B2C or a business to consumer company. Okay, rather we want to focus on a B2B model. Okay, now why must have that happen? Okay, a very logical answer to that question is 66% of Thyrocare now is owned by Pharmeasy. Okay, so Pharmeasy can change the business model of Thyrocare to benefit the shareholders of Pharmeasy. Okay, And don't forget that Pharmeasy has filed for IPO papers with SEBI. However, they have not successfully completed their IPO yet. Okay, so it is very important for Pharmeasy to get their job done at a reasonable rate. Okay, now how is all this reflecting on the share price of Thyrocare Limited? Okay, like I told you, the stock is down a good 40-50% in a year's time. Okay, but why exactly has that happened? Okay, there is a very important reason behind it. Now I am flashing on your screen the price to earnings ratio chart for Thyrocare. Okay, so as you can see, in the year 2017 this company used to trade at a good 40-50 times the earnings. Okay, and then during COVID they did go as high as 100, and they actually crossed 100, okay, somewhere in 2020, right? However, ever since the acquisition of Thyrocare by Pharmeasy, the price to earnings multiple has shrunk, okay, and now it is trading at only 25 times. Okay, and giving your disclaimer at this stage, even I was holding Thyrocare at a point in time. However, as soon as Pharmeasy decided to acquire Thyrocare, I did this study and I said, okay, it is now time to exit. Okay, so today I don't have any position in Thyrocare. Okay, and this used to be a fantastic company run by fantastic management. However, the management decided to sell their business. Okay, so how this has happened is, in 2017 when they came out with their IPO, they have shown a good big dream to investors that this is a growth focused business to consumer oriented company. Okay, however, now that B2C model itself is no more, and now they are saying that we are a B2B company. Okay, and it is a known fact that B2C companies enjoy a higher valuation multiple in India than B2B companies, right? So it is very clear in front of you what is the future ahead for Thyrocare. Okay, especially since it is in the hands of Pharmeasy. Okay, I am not making any recommendations here, just putting the facts plainly in front of you, right? So what are the lessons from this particular case? Okay, number one, growth can moderate at any point in time. Okay, so you see there are a lot of companies which come out with their IPOs and they show big growth plan to investors. Okay, however, the reality is that many times, or rather most of the times, the promoters themselves are content with a limited amount of growth, and then they decide to sell their business. And what happens when the promoters sell their business? The minority shareholders do not have a say into how that company is going to be run by the new promoters. Okay, of course, the new promoters would make you an open offer as per the SEBI regulations, and if you decide to tender your shares in the open offer, you can exit from that particular investment. Okay, however, it is very important to note the conflict of interest in this particular case, how Pharmeasy is making good use of a business like Thyrocare. Okay, and how the minority shareholders are suffering. So that's all I have for now. If you like the video, do press the like button, subscribe to our channel, and do not forget to check our small case. Thank you very much.